Hello everyone, hope you all are doing great. I wish you all do great in CPP exam also. That's why I have put together these videos. I also want to thank you all for your support, for your comments and likes as they inspire me to put together these videos for the CPP candidates. In this video, I will cover some basics of payroll accounting. This is section 11 in payroll source. Accounting is a very broad topic. I will try my best to make it easier for those who have not studied accounting, and we will concentrate only on those aspects that are affected by payroll. Almost 9% of your exam is on payroll accounting, which is about 25 questions. And this video will give you a basic foundation of the payroll accounting concepts. Payroll is one of the biggest expense in any organization. Businesses have to pay employees, they have to pay taxes withheld from employees' paychecks and also pay their own share of taxes. So this expense should be recorded in the accounting books after each payroll cycle is closed. Today, many of these functions are done automatically. However, the payroll professional must understand the steps the computer is performing. Let's see how the information flows from payroll to accounting. Once the payroll is finalized and the payroll register is generated, this information on the payroll register is used and the journal entry is made to book the totals of the payroll period in the journal, which is the book of original entries, and then it is posted to separate accounts in general ledger. From there, the information will flow to the financial statements of the company. In order for the financial statements to be accurate and present true picture of the financial performance of the company, it is crucial that all expenses are matched to the income for the period. That is why the booking of the transactions in accounting is time sensitive. All of the company's transactions are recorded and classified into various accounts using double entry system that is based on two equations. The first equation is asset equal liabilities plus equity. This equation provides the basis for the financial statement called balance sheet, which shows the company's financial position at a particular point in time. The second equation is actually made up of two equations. Revenue minus expenses is equal to net income or net loss, and then net income minus income distributed plus contributed capital is equal to equity. This equation is the basis of two financial statements, the income statement and statement of retained earnings. In order for each equation to remain in balance, that is the amount on one side of the equation equal to the amounts on the other side of the equation, a double entry for each transaction is required. One account is increased while other account is decreased. This is done by debits and credits. All journal entries are made up of at least one debit and one credit entry. And all general entries impact at least two accounts. Whether you debit or credit a payroll entry depends on the type of transaction made. The debits and credits in your books should always equal each other. There are generally 5 types of accounts used in businesses to classify transactions. Assets, liability, equity. These are balance sheet accounts. And revenue and expenses are income statement accounts. When it comes to payroll accounting, you typically use asset, liability, and expense accounts. Assets are items of value your business owns. As you pay an employee, decrease your asset cash account to reflect the payment made. Liabilities are the amounts that you owe. For example, taxes payable. Now you have withheld taxes from your employees' paychecks, but you haven't deposited the taxes to the third party. So they will sit on your books as a liability until you have made the deposits. So the taxes payable is the example of a liability. Expenses are costs your business incurs during operation. When you pay an employee, you increase the expense account because you are paying them. And the example is gross wages. So gross wages is an expense account. Debits, credits, and T accounts. In order to understand the basic accounting procedures, payroll practitioners should be familiar with the manual method of recording transactions. Knowing the basics will make it easier to trace the transaction even in the computerized system. Here are the main types of accounts. There may be many sub-accounts under each type. Example, asset will have sub-accounts for a company's assets like cash, inventory, machinery, accounts receivable, etc. And then there will be separate accounts under liabilities such as wages payable, taxes payable, loan payable, etc. Similarly, there will be separate accounts under expense such as wages expense, taxes expense, etc. Accountants usually use a T to keep track of increases and decreases to an account. The right side of the T is credit and the left side of the T is debit. It is very crucial to remember which accounts increase on the debit side and which accounts increase on the credit side. Let's look at an asset account first. Whenever there is an increase in an asset, we put it on the debit side, meaning the left side of the T. When we want to decrease the asset, we will make the entry on the credit side, meaning the right side of the T. Liabilities and equity sit on the other side of the equation. Therefore, their increases and decreases are opposite to asset. Liability and equity increase on the credit side and decrease on the debit side. Spend some time remembering these debits and credits. Once you get the hang of this, accounting will become very easy. Here is another tool to remember on which side each account will increase. As we know that left side of the T is debit and right side of the T is credit, and some accounts increase on the debit side and some accounts increase with the credit entry. So this picture shows you the accounts that increase on the debit side and those that increase on the credit side. If you look on the debit side, you will see the accounts as expenses, assets, and draw. So they all have debit entries. They increase with the debit entry. And the mnemonic is dead. If you look on the credit side, all those accounts that increase with the credit entry are liability, equity, and revenue. So the mnemonic to remember that is clear. I really want to shed some light on this word accrual. There may be instances where the accountant has to do adjusting entries at the end of accounting period. If there is a gap between the date of the last payroll deposit and the date on which the financial statements are closed, then the accountant will need to make an adjusting journal entry to record the incurred salary, expense, and liability. These entries show the amount of wages the employer owed to the employees that have not been paid. It represents a liability for the employer. The accrued payroll concept is only used under accrual basis of accounting. It is not used under cash basis of accounting. Let's look at one example. If we are making financial statements as of December 31, we need to determine how much we owe to the employees as of that cutoff date. Assume that we pay employees weekly and that pay period ends every Friday and we pay employees every Friday. Let's say that the December 31 also falls on a Friday. It's a date when we close our accounting books. It coincides with the last pay date of the wages, so in this case we will not make an adjusting entry. But if the December 31 happens to land on Wednesday, then we would have 3 work days in December in which employees have earned money for which they have not been paid. These 3 days of work are what should be shown as a liability on financial statements, and the related expense should be included on the income statement. So in that case, adjusting entry will be required. Let's review some of the material that we have learned. Which of the following accounts describe the legal obligation of a business to pay its debt? When we talk of the legal obligation, we are talking about the liability. So the answer is B, liability. Next, FUTA and SUTA taxes payable are what type of account? Now the key word is payable. So it's a liability account. True or false? Amounts deducted from the employee's earnings and held for payment by the employer become liability to the business. That is correct. The payroll register is the source of information for preparing the journal entry for payroll. That is also correct. Where are the daily transactions of the business recorded first? The daily transactions are recorded in the journal, which is also called the book of original entries. Where are the transactions posted by account? So after we record the transactions in the journal, we post them in the general ledger. What is the normal accounting flow? Means how the transactions flow. First, there is a transaction. We record the transaction in the journal. Then we post it into the general ledger, and from there it goes into the financial statements. I want you to pause the video here and do this question, and the answers will be provided in the next slide.